the next thing I kind of want to talk about, so we talked about governance and contracts. So some people who might be rewatching this and who have no idea, they're totally new to this business thing, and they just need like their hand held. They just want to do and build something themselves. Maybe they just want to be a business of one and subcontract out work. Do you have to have governance in place? I mean, I don't. So this is a learning experience for me as well. Do we have to have, as solopreneurs with a one-man LLC who has subcontractors, do we need a governance sort of, unless we want to, is governance only for if we want to bring somebody in as a partner where we're splitting equity and stuff?
Well, so you can create an LLC called a single member LLC. That's for one person, right?
Okay.
And it's less important because you only have to deal with yourself as an owner, but having it in place also helps when things happen that you couldn't necessarily foresee. Perhaps you're doing a wonderful, you're doing a great job and somebody wants to buy you. What are the rules for buying you? And part of this also gives you, one of the problems we have as solopreneurs is in many different situations, we have to wear both the black hat and the white hat all at the same time. And it's a real difficult thing to balance. But again, having the governance structure in place gives you the ability to follow a certain set of rules regardless of what's going on. The nice thing is that if it's just you, if you want to change those rules, it's really easy to change.
Yeah.
But I would still have them in place. And the other thing is that it took me a long time to learn what rules should be in place that are really important to helping grow the business, and what rules your attorney or your accountant get kind of caught up on that really don't have a lot of value as the business person. Your attorney and your accountant should be advisors. They shouldn't tell you how to do your business. They should tell you, they should be there to tell you when you're about to go from gray to, off the edge, right? You can't buy a horse and deduct your horse as a business expense, right? But they should be able to tell you that. But you should be the one who says, hey, I think I want my business to own a horse. So,
I think what is it? It's like, how can we make this a business deduction versus like, is this a business deduction? And having that conversation with your CPA.
Right. And it's also, by the way, important at the end of the year, even if you're doing everything yourself, it's probably worth it to have an accountant who will go through and just make sure everything is done correctly.
Yes.
Things like depreciation, people have a hard time with depreciation, making sure that you're collecting and paying taxes in states where you need to collect taxes. Most states don't tax services, but some do. And you have to be aware of that. Having an accountant will probably help you become aware of that, right? So that one of the worst things is to not collect tax on a project that in a state where you should have, and then the state contacts you and says, hey, you owe us $2,000 in taxes. You never collected it. Right. There goes your pocket plus some.
I think that's a really big point there too. Like, I feel like going from people really early, especially me, like I'm still really early on too. I still want to talk about contracts, but I think I'm still young with my business and stuff, but I kept reading like the secret weapon to savings is like your biggest expense in your entire life. It will always be taxes. So like your secret weapon really needs to be a really good accountant. I've had my first one. They were absolutely terrible because I was reading all these books. And there was like, if your accountant has these red flags and they're telling you can't, and plus I was asking different things. I was like, is this an expense versus how can we make this an expense? And actually, like, you know, some of your clients, do they, you know, are you able to get them the things that I'm asking you deducted for them? And you know, the books that I was reading, they were like, you should be able to get your food, your restaurants, but it's just how you're procuring your food. You know, at what times are you eating out? Are they for client meetings? Are you working out at a cafe while you're eating? Like, it's very contextual in terms of like how you have to do these activities for it to be deducted. Because I see Lee in the chat was asking, you know, or saying my accountant said I can write off my Starbucks orders to a certain amount, of course. And I was like, well, you might want to have a conversation, because it's not, from my experience, it's not this certain amount or a cap. It's how are you doing these activities, and does that make them? And again, this is not like advice. This is just my experience, like David is also sharing here. But if you find a good bookkeeper that works with an awesome CPA, like that is a weapon that can not only save you money, but get you a lot of money back at the, you know, quarterly, if that's how you're doing your taxes, or at the end of the year. Yeah. So okay.
Yeah, I would agree.
Yeah.
I think that just having somebody who will look at your books quarterly to be sure that you're not doing something wrong. You know, my experience has been that the IRS, unlike the commercials that you see on TV about how terrible they are, they're really not that unreasonable. If you do something wrong because you just didn't know that you were doing it wrong, and somebody says, hey, you did this wrong, and you go back to them and say, oh, I should have paid this amount of tax, I didn't realize it, they usually are pretty good about just, fine, pay the tax. You know, it's when they think you're trying to put one over on them, cheat the government, whatever, that's when you run into problems. As far as the woman Starbucks order, there are non-deductible expenses and there are deductible expenses. If you are having a business meeting, you can deduct your Starbucks order because you're having coffee while you're having while you're discussing business. It's my understanding, and I want to be careful because I'm not an accountant.
This is not to be construed, guys, as legal tax advice. We are sharing our experience,
right?
And but, if you
right,
just
so
double down.
If you're if you buy a cup of coffee while you're sitting at Starbucks waiting for your customer to come there, that cup of coffee isn't deductible. It's a non-deductible expense. If you buy your customer a cup of coffee and yourself a cup of coffee and discuss business, it is deductible. And there's also kind of reasonableness. You know, deducting a $10,000 dinner is probably going to get you in trouble, right? Deducting a $100 dinner for 2 people probably won't.
Yeah.
So you know, but I always believed that you push the boundaries and let your accountant or your attorney say, no, you can't do that.
That's their job.
Right.
That's their job.
Right. And I was never afraid to go to the IRS and say, oops, I'm a dummy. I made a bad mistake. Let me correct it. Right. And we've never had problems as a result.
Yeah. All right, we could talk about taxes all day, and I'm seeing that we're about almost time to the Q&A section. I really wanted to